Hi, everybody. This is the investing teacher, high school science teacher, teaching others how to invest. Today, I have an exclusive interview with Stephen, from the founder of syntheticyields.com. Hi, Stephen. How are you doing?
Good. How are you doing, Lance?
Doing great. So, found you a Facebook group from the Option Wheel group, and you've been doing some posts there about some of your positions, what your overall philosophy is. And I just wanted to chat with you a little bit and go a little bit over your strategy and how you find success with it.
Great. Let's do it.
All right. So when did you start investing and what got you interested?
So I actually invested at a young age. I was 14 when I bought my first shares of stock, really at the encouragement of my grandma. So my grandma was really into investing. And whenever I go to her house, I'd sit with her, watch CNBC, and start asking questions. And that kind of led me to the investing world. And ever since then, I've been pretty obsessed with investing and finance and stocks. And so that was a beginning of a lifelong journey.
Yep, sounds good. I'm actually running an investing club at my high school. There are some 14-year-olds. We go up to around 18, trying to give them that little spark to really enjoy investing. Right?
That's great. I think that's great. We had one at my junior high that I joined shortly after I was introduced by my grandma. And it was great. It was a lot of fun. I really enjoyed that class.
Sounds good. So did you normally start like buying and holding stock, or did you start trading options right away?
No. So yeah, in my younger years, I was purely investing in stocks. I didn't know anything about options. It wasn't until much later, I think 2010 was when I picked up my first book on options. And I was actually recovering from tonsillectomy. So I was in bed for a week. And I started reading up on options and I was hooked. They were very interesting to me.
So what got you interested in selling options? I know you might have initially seen the buying side. That's what a lot of people tend to do, but I know that you're mostly focused on the selling side of options.
Yeah. So initially, I was an option buyer, I guess you could say. I would just mostly buy longer duration call options on companies that I liked. And I actually still do some of that to this day. But I guess there was an evolution there where I went from buying straight up call options to then moving into spreads, vertical spreads was kind of my next iteration. And from there, I kind of evolved to the current strategy that I have, which is based on, I guess, simultaneously buying a longer duration option and selling a shorter duration option.
And would you say that that's your favorite or primary strategy currently?
Yeah, now that's become my primary strategy, my favorite strategy. And we can go into the details of why, but I've just found that it kind of has elements of all the things that I would like to see in my investments, where I make money from the passage of time. You can make money if the stock is flat to slightly down to up, right? And so there's a lot of ways with options that you can make a profit. And initially, when I started with long calls, there's only one way you make a profit, and that's if the stock goes up in a certain amount of time, right? And I discovered that's not always the case with stocks, as many of you have found out with the recent market environment, right? It's very hard to just buy long calls and hope and pray that things will turn out.
Right. So I guess when you're first starting on these strategies, have you considered doing the covered calls first, or did you go right into a poor man covered call, a long diagonal?
Yeah, so the strategy that I teach and that I advocate, that I think is a really great strategy, is it's a poor man covered call type strategy with some rules around it. Now, in order to understand that, you probably want to understand a covered call, and I'm sure many of your listeners are probably familiar with covered calls, but if not, both of us can explain really quickly what that is. But I did start looking at covered calls. I had joined a lot of Facebook groups, like the Option Wheel Facebook group, and I saw that people were doing these covered calls. And I had heard of covered calls because if you pick up any options trading book, any intro to options book, the first thing they talk about is covered calls, right? And so if you own 100 shares of stock, then you can sell a call option with your 100 shares as the basis for that, or the collateral for that in case you get called away, right? And so I kind of dismissed that for many years and thinking, it's not very, it's not a very sexy strategy, right? It's kind of an income generation strategy. But over time, I've come to learn that actually, I think there might be something there. Same with cash secured puts, right? So I got into cash secured puts as well, which is basically the same thing. But that ultimately led me to this poor man's covered call, which instead of buying 100 shares, which could require quite a bit of capital, I could buy a long duration leaps option, pretty deep in the money, and then sell short duration, like 30 DTE calls off of that.
Is there a reason why you prefer doing those poor man covered calls over the covered calls?
Yeah, there's a couple reasons. And I know there's a lot of disagreement in this area, right? And not to say that one style or one strategy is completely better than another strategy. They've all got their pros and cons. But for me, what I liked about poor man's covered calls is that I could spend about half to maybe even 1/3 of the capital or tie up 1/3 to half of the capital that I would need for a covered call. And I know a lot of folks out there think, well, but you shouldn't multiply the number of poor man's covered calls that you do just because it costs less. And I agree with that. I think you can get into trouble with that. But what I liked is it left a lot of cash that I could keep in my account in case the trade went against me, right? As I advocate that it's always good to have a lot of cash on hand so that you can make adjustments, so that you can invest in things when the market crashes, the market goes down a lot. And if I was just doing straight up covered calls, I would tie up a lot more capital and wouldn't have the cash available to go out there and invest when there's deals in the market, right? Warren Buffett says, when it's raining, or I'm going to butcher this quote, right? When it's like raining gold, you don't want to have a thimble to catch it, right? You want to go out there with like a big wash tub or a big bucket, right? And so that's your cash, right? You need to have ample cash on hand at all times in case something like March 2020 happens and you can take advantage of the short-term downturn.
Right, makes sense. So, the way that I and you do as well is consider, selling covered calls, almost like renting out your shares in a way, similar to, going to Turo, renting out your car, Airbnb, renting out your house and whatnot. So if you could give a little bit more elaboration on your strategy and how that's very similar to these services, just using stocks instead of, physical properties.
Yeah, sure. I often compare the strategy. So I've kind of dubbed my strategy the option rental income strategy, because I do like to compare it to short-term rental businesses like Airbnb and Turo. Because when you look at it, it's very similar type of a model where you're buying a long duration asset, whether it's 100 shares of stock or a leaps call, and then you're essentially renting the upside out to another person by selling a short duration call. So with Airbnb, your underlying asset happens to be a vacation home, or with Turo, your underlying asset, it turns out to be a used or new car, right? And then you're just renting that out for a short duration of time and collecting the rents. Same thing with covered calls and poor man's covered calls. But I guess the distinction here would be with the covered call, it would be like you bought the Airbnb home and now you're going to post it on Airbnb and collect the rents on that. Poor man's covered call, I guess, is kind of like, you may have heard some people, instead of buying a home, they'll negotiate with a landlord like a somewhat long-term lease, like a 3-year lease on a home, and make a deal with the landlord. Say, hey, I'm going to rent this home out on Airbnb. I'll pay you, rent consistently for 3 years. And I guess there's a whole industry out there. I've looked into it. There's a lot of online courses that teach you how to do this, how to negotiate these things with landlords. So poor man's covered call is kind of like that, where instead of buying the home, you're leasing the home on a kind of a long duration basis. And so that's your leaps call, and then collecting rents from there.
Makes sense. Can you walk through a typical example of how would you make a profit if, let's say, the stock remains flat for most of or all of the duration of the short call, and then it's, day of expiration or the Monday afterwards?
Yeah, sure. Let me share my screen really quick and I can show you a quick example here. So you should be seeing my Thinkorswim screen. And so what I'm going to do is I'm going to show you an example. So I was just looking at this particular stock today, which is ticker symbol WBA, which is Walgreens. So Walgreens, they have had a difficult last couple of years, but their stock price is kind of getting to a point where I feel like it's undervalued. And granted, this is not investment advice. This is just for educational purposes, but so I'll find a stock like Walgreens and say, hey, you know, I'm actually interested in investing in Walgreens. So I won't ever do this on stocks that I don't really want to hold for a long time. So I want to look at good, solid, large cap type companies for the most part, and that have liquid options. But what I do is here's the option chain for Walgreens. I will buy a Leaps call at least 12 plus months out. And so let me just look at the January 2024 options. I'll typically buy one that's pretty deep in the money that has about an 85 delta. This one's got an 84 delta. And then I will sell about a 30 DTE call at the money. And the reason I sell at the money is that there's the most time value there. We won't get into the details of that, but time value is what I collect as my rent, essentially. It's also called extrinsic value. You can see in this column here. And so it's about 37 is the at the money call. So I will sell that and it'll create me this diagonal spread, which for those of you who are not aware, diagonal spread is just another name for a poor man's covered call, in my opinion. And so this software is really nice because I can kind of analyze the profit loss profile of any of these trades. And so you can see from this blue line that I profit above anything above 35.64 with the stock currently trading at about almost 37, right? So it gives me some room to the downside to still profit, and I profit even if it goes up. So to answer your question, yeah, if the stock actually stays flat, that's my ideal scenario. That's where I would make the most money, is approximately at the $37 per share, which is where it's trading right now.
So how would you manage the position? Let's say if you keep moving to the right a bit and it goes up more than that short call.
Yeah. So, I mean, and if you structure it, if you choose the right strikes and they're wide enough. So I've got the 25 call that I purchase and I'm selling the 37 call. So there's about $12 difference between the two strikes, right? As long as that is wider, so the $12 is more than the cost of this, which is $11.45, then I should never have a loss to the upside, which you can kind of see from this profit loss chart. You can see that pretty much I'm guaranteed a $55 profit, even if it went to infinity, right? Which is not likely to happen. But there is a downward drooping with these poor man cover calls typically. And that's because my long call is about an 84 delta. It's not 100 delta, like 100 shares of stock. So it's acting like about 84 shares of stock initially, and that increases as it goes up. But there's a little bit of a droop. But generally, you know, stocks don't skyrocket. And if they do, I still make money.
Good point. If you want to briefly talk about other ways that you could mitigate it, I know sometimes you'll recommend to buy shares of stock, like to make it near 100 delta.
Yeah, that's a good point. So if this downward droop bothers you, what I like to do is just simply add, usually about 10 shares of stock does the trick. So I could buy 10 shares of Walgreens for about $370, right? So if I added that to this trade, you can see how this line flattens out quite a bit. Not perfectly, but you know, even at $40 a share, I'm still making $107 profit. At the 37, I'm making 115. So pretty similar profit profile across the board. And then actually, if you buy the 10 shares and the stock skyrockets, you can see that 10 shares actually starts to increase your profit as it goes higher. But I don't see Walgreens shooting up to $50 a share anytime soon.
Yeah, sounds good. So I'm going to do a quick walkthrough of what you offer in syntheticyields.com.
Yeah, so I started the website to show people this strategy, show them the ins and outs. There are some nuances to it. So I do some teaching there. You can join my Discord group where I primarily do the group coaching. And I also share my trade ideas and my trade alerts as I'm trading the strategy myself. And I'm often seeing opportunities out there just as I'm doing my normal scans. For me, it's fun. So I enjoy sharing what I find out there, and I enjoy sharing what I've learned. I like helping people avoid the mistakes that I made. And so, yeah, we'd love to have more people join the Discord. If you're interested, just go to syntheticyields.com. You can sign up. You can even sign up for free.
Sounds good. All right. So, Stephen, I don't have any other questions. Any final thoughts you want to share to viewers?
I guess if you're interested in just learning more about making options trading a nice side hustle for you, I mean, that's what I've done. And I think it's a great alternative to some of those things like Airbnb or Turo. So feel free to hit me up on Facebook if you see me on Facebook. I'm somewhat active on Twitter, not lately. So if you find me there, Synthetic Yields is my handle. Feel free to send me a tweet.
Sounds good. Well, thank you very much for spending time to explain your service, and have a good night.
Thank you, Lance. Appreciate it.